Welcome to Inside India. I'm Amitod Singh. These are your headlines that we're tracking. Asian markets are building on gains fueled by tech and growing expectations for a Fed December rate cut. The Indian rupee backing away from that 90 level after the central bank stepped in to stem its slide, but the currency still languishing at record lows as the RBI governor hints at room to lower rates. And India weighs its Russian energy purchases as the US and Ukrainian officials rush to finalize a peace plan before President Trump's Thanksgiving deadline. We'll discuss that. All right, a quick look at the Asian markets. They appear to be tracking Wall Street's gain, fueled by AI stocks led by tech-heavy NASDAQ, powered by Google parent Alphabet, rallying as much as 6.3% on a positivity around its product Gemini. Now, this after Novo Nordisk shares also fell some 10% after a trial for Alzheimer's didn't meet its main goal. Now, that's what's happened in the US. In focus in Asia is the rising hopes of a Fed rate cut, Japan and China tensions, Trump and Xi's phone call. And don't forget, we also have that Thanksgiving holiday in the US on Thursday. But if you take a look at what's going on right now, it's largely green, but what's happening in New Zealand and Australia, unclear, muted really. The same is with some other places, but look at the Nikkei, look at the Kospi and Taiwan. That's where the positivity is, and that's going to be keeping in mind that these are all, interestingly, very connected to the entire AI stock conversation. Now, let's give you a sense also of the Indian markets. They come online in about 45 minutes. Here's what GIFT Nifty futures are indicating. A muted start, really. That's what it's looking like in India. It's likely to track all that's happened in the US with AI stocks rising and Fed rate cut optimism. The caution likely to stay till an outcome on India and US trade talks, but concerns around the depreciating rupee in focus, even if it has strengthened just a little bit on Monday after hitting a fresh record low of 89.49, at the moment 89.0140. And new data also showing the Reserve Bank of India sold nearly $8 billion net in the foreign exchange market in September, stepping up intervention to slow the rupee's decline. Trade tensions with the US and a spike in gold and silver imports have kept the rupee under pressure, pushing it to a fresh low of 89.49 just last week. Now, the RBI's forward dollar sales also jumped to 59.4 billion, marking the first increase in 6 months. And one of the reasons we're seeing market gains, optimism about lower rates, is this. Treasury yields are retreating as bets grow for a Fed December rate cut. Currently, as you can see out there, it's 3.49 for the 2-year, 3.60 for the 5-year, and 4.03 for 10 and 4.68 for 30 years. Now, the Fed funds futures jumped higher to an 80% chance. The Fed will lower rates by 25 basis points next month is the expectation clearly now. This after more Fed officials coming out in favor of easing. San Francisco's Fed president, Mary Daly, telling the Wall Street Journal she would back a rate cut due to weakness in the job market being a bigger risk than inflation. Fed Governor Christopher Waller, who is among the top contenders for the top Fed job, also saying a December cut would be appropriate, though January would be uncertain in an interview with Fox Business News. Meantime, the Reserve Bank of India's Governor Sanjay Malhotra has hinted more interest rate cuts, saying there is still room to lower policy rates. In an interview with a domestic media outlet, Malhotra said, economic data since the October meeting has not reduced the scope for easing, though the decision will depend, as always, on the MPC. The central bank cut rates by 100 basis points in the first half of 2025, but has paused since August. Record low retail inflation of just 0.25% in October has strengthened expectations of a cut in December. Now, Malhotra also addressed the rupee's recent slide, calling it a natural depreciation in line with historical trends, linking it to concerns around volatility rather than any mark. Now, we do have right here in the studio with us Tantek Leng. He is the Executive Director of APAC Forex and Macro Strategist at UBS Global Wealth Management. Thanks so much for joining us, Tech. I appreciate you coming on. I think it's appropriate to just go with what has been said by the Reserve Bank of India's governor, keeping in mind that we're looking forward to that rate cut decision. What's your take?
Yeah, I do agree that the Indian rupee does have a trend depreciation against the dollar because on a 5 to 10 year basis, simply because of inflation differential, like what the governor said, about 2 to 3.5% of annual rate of decline is actually the norm. But having said that, of course, I think the inflation picture in India has also stabilized somewhat. For example, the October headline number was close to 0% as well. So
really
I don't
low.
think
Yeah.
exactly. So
And
I
we're
don't
not
think
talking core, obviously.
yeah, core is above 4 still.
Yeah.
So I think from an inflation differential dynamic, some good news there is for rupee. But I think it is also about trying to break the glass ceiling because trying to keep the currency below 89 is actually driving moral hazard to some degree as well.
Okay. The question that I want to also get to is what's your take on whether the RBI should cut its rate? And then I'll come back to this rupee part.
Yeah, I do think there is scope and justification for another cut. I think where the policy rate is sitting at 5.5%, headline inflation is close to zero, even though core inflation is 4.5%. The fact is that we haven't gotten a lot of clarity from the US-India trade deal.
Yeah.
So I think what we do expect is actually for something to be reached by the end of this year. But from where the policy rate is, it is still slightly restrictive, given that the domestic consumption is still not that strong. So we are, as our base case, looking for one more cut from the RBI.
Okay, sorry, what do you mean by domestic consumption is still not that strong?
Yeah. So I think since August, where the import tariffs has been increased to 50%, anecdotally, we have been hearing a lot of India businesses coming under pressure, especially from the apparels and lower value-added industries. Yeah. So I think there is a bit of reshuffling of supply chains. But if there is a deal to be reached by the end of this year, I think that can actually alleviate quite a bit of that. So you're talking about the
last 5-6 months.
Exactly.
Because there was a festive demand that we should factor into this conversation in terms of domestic consumption. So we're assuming here that you're thinking that the RBI should effectively cut rates because that's what you kind of indicated. I know it's a coin toss. Most analysts have been saying that it's a coin toss. The decision is a tricky one. But what happens if the RBI does actually cut rates? Does the INR then weaken or are there any offsetting factors?
Yeah, I think if it occurs against the backdrop of Fed also progressing with rate cuts, I think that should be fine. Because as a base case, we do expect the Fed to not only cut by once, but by twice over the next 3 to 4 months. Okay. So if the RBI cuts by once and the Fed cuts by once or twice, actually that would offset the interest rate differential.
So what's your outlook for 2026 then on this?
On the interest rate cuts per se?
Not the rupee.
Rupee would be looking for a stabilization between 88 to 90 for the whole of next year.
Okay.
Yeah.
All right. How do you look at this? Because this is a tricky one. The Reserve Bank of India Governor Sanjay Malhotra, in the same interview that he gave to the local domestic outlet Zee News, he said that the rupee's recent depreciation has occurred due to penal tariffs on Indian exports, by the US, of course, and the country's current account. Reports are suggesting that those tariffs will be the first to go in a deal. That could come through in tranches. It's not being signed yet. But that's the reportage that we've got. In that instance, do you think the market is priced that in? How will the market react to that? What's your view?
Yeah, I think the market is expecting some relief from the tariff, but I don't think it has been fully priced because our base case expectation is not just that the 25 punitive tariff on Russian oil imports is to be removed, but also on the reciprocal layer, which is now currently 25, we're expecting that to come down to something like 15. And that should actually put India more or less in par or slightly better than the rest of the Asia peers. Okay. I think what the market is pricing is that for the 25% Russian oil import punitive tax to be removed. But it hasn't really factored in that the base layer is going to be reduced as well.
Okay. Yeah. He also has indicated, the Indian Central Bank, he talked about intervention in that same interview with regards to the rupee. Now, the causation of why that's being done is perhaps has different views. The analysts are saying something, but the RBI, the governor himself, is saying that it's only to control volatility. It's not about this, psychological mark of the 90 or anything like that. How do you how do you calculate that kind of volatility? Like, when do you jump in? Is that a fair assessment? Do you think right now the RBI intervening based on its assessment of that kind of volatility is right or wrong?
Yeah. Volatility is always a strange word because it is on one-sided pressure right now, right? Yeah. So, but if you look at the implied volatility, it has jumped from something in the mid-3s to the mid-4s. I think it is, volatility is something that the traders look at, especially from a yield carry attractiveness perspective. The lower the vol, the kind of the free lunch I'm getting is higher, so I would be more willing to park my money in Indian rupee. I think what is really relevant from what the governor said is that there shouldn't be any line drawn, because if he were to be explicit, obviously the market would then test him. So that is a bad idea. As far as the strategy is concerned, I think they are rationing the level of reserves. It is actually not in a bad level. 620 reserves after accounting for the forward book, right? It was actually as low as 550 at the start of this year. So I think the strategy is really to conserve the FX reserves, intervening at a measured pace while waiting for the deal from the US to come by.
Okay. One thing didn't make sense. On Friday is when that record low was broken, right, with the rupee. But the RBI didn't step back or step in at that time. You know, it just paused. It didn't do anything, seemingly. On Monday, they came in again, reportedly, intervened, which didn't make sense because the volatility happened on Friday. Why did they not intervene then?
In my opinion, actually, the intervention should be better done on actually the Friday close rather than waiting for Monday, because there was a lot of local concern over the weekend when it closed at 89.50, right? So I think that it is a little bit of a choice between sending a stronger message that the 89 level is not the line in the sand. Otherwise, it could actually pretty quickly reinvoke the kind of speculative buying of the rupee with the mindset. So I think maybe what the RBI is trying to do is to just break the glass ceiling for 1 or 2 calendar days and then show that they are still in the market this week when market open on Monday.
How much does the RBI factor in the likelihood of, what now, 80% that the Fed is going to cut rates?
I do think this is part of the calculation, because very similar to other regional central banks like Indonesia, the scope for local rate cuts to support the domestic growth picture is highly reliant on how much the Fed is cutting. So for example, the scenario, if I were to flip it around, if the Fed doesn't cut at all in December or next year, I actually think that they might step back from even one cut from the RBI.
Okay, very interesting. One thing that has crept up in discussions is the rupee weakening or is the US dollar strengthening?
It is actually rupee weakening, because on a year-to-date basis, just to be a bit more objective, right? The rupee has fallen by about 4%. It is indeed the Asia's underperforming currency, right? On average, it's about 1 to 2% of strength. So I think what the market was surprised is definitely the fact that in August, Trump imposed the punitive tariff on India. That actually caught a lot of markets by surprise. And the underperformance was actually from that point onwards.
I've discussed this with several guests, and the point that's being made is by not government spokespersons, but those as standing in as advisors to the government in India. They are saying that the market sentiment is disproportionate to the reality of the impact of tariffs on India, because it's not a big deal, the US export, when you compare it to the entire Indian economy, right? Do you agree with that aspect?
I think the level of escalation right now is still manageable, but I think not forgetting that in terms of services exports to the US and in terms of the income repatriation by the India diaspora in the US back to India, that is actually pretty sizable. So I do think the market is slightly being too sensitive to what has been announced. But actually what could come if things were to spiral in the wrong direction could actually be meaningful. The good thing that we have seen is that ever since the escalation against India happened, when India started to get closer to the BRICS group of countries, I think the reason why we are hearing less pressure from the Trump administration on India is because they realize that they shouldn't be pushing India too far away from itself, especially given the rare earth shortage. global realliance kind of shuffling, right? So I think the good thing that I take away is that the reason why Trump hasn't been piling pressure on India is actually as a glass half full, that actually they are not using India as the target with regards to their strategy to get a Russia-Ukraine peace situation.
Okay, that's very interesting that you even use the words that he's not putting pressure on India. You mean in the recent past?
In the recent past, exactly.
Right, okay, just to clarify. Okay. Is that a viable strategy, geopolitically?
I would say
because
yes.
India has made it very clear that it's not going to
Yeah.
budge. But it does seem to have budged.
Yeah.
We've heard that Reliance is not going to import or is not importing oil, but there's not enough data to support that. There is all kinds of deals around LPG that are happening with the US that India has done, which is a bit surprising. But there are those arguments that it makes economic sense and this is not a geopolitical move. So what's your take on whether the Ukraine-Russia deal happens, which is being negotiated, the peace deal, what India's position in this entire negotiation is, and how this impacts the Nifty 50 rate?
I think as a first reaction from political office, definitely we are not surprised to hear the very strong rebuttal, because no head of government can actually appear to be under so much pressure from a single trading partner. But I think the relationship between India with regards to the oil import needs and Russia being a very strategic diversification source of energy imports is very real. That is not going away anytime soon, but there is definitely scope for a bit of pivoting from Russia energy imports to, at least in the short term, 12 months, US energy imports. I think that can be a chip on the table. And that is actually where I think things will settle. US would be happy to offer trade tariff relief, while India makes a bit of pivot over the next 6 to 12 months with regards to the energy imports.
We're waiting for this. It's been everyone's predicting this, but it's still not happened. Last question for you, briefly, running out of time. Outlook for gold for 2026 and outlook for Nifty.
Yeah. We are still positive on both. So India is actually still one of our attractive markets because it has a lot of potential, especially structurally, demographically. On gold, our standard reiteration is that please have 5% of allocation within a portfolio. It can hedge against any unforeseen geopolitical risk. Target for us is at 4,500 by the middle of next year.
Okay, all right. Well, thanks so much for coming to the studio. It's always better to have this conversation in person. Much appreciated.
Thank you for having me.
All right, and that was Tantek Leng, UBS's Global Wealth Management rep. Coming up, lots of AI buzz in the markets, including a possibility of India's first AI-focused IPO. Details on the other side. Welcome back. Now, Temasek-backed Sembcorp Industries is reviving plans to list its India business in Mumbai. Reuters sources say the company has appointed Citi, HSBC and Axis Capital for a potential IPO. The listing discussions are still at an early stage with no final decision yet on deal size. The unit, Sembcorp Green Infra, operates wind, solar and energy storage assets, competing with players like Adani Green and Avada. India's buoyant markets have raised over 16 billion this year, making it the world's third largest IPO market. Sembcorp's India arm recently expanded through acquisitions and reported 40 million in profit on 252 million in revenue last year. In the meantime, we could soon get India's first AI-focused IPO. The Mumbai-based AI firm Fractal Analytics getting a nod for its IPO draft. The company provides AI and analytics services to some of the world's largest tech and consumer names, including Microsoft, Apple, Nvidia, Alphabet, Amazon, Meta, and Tesla. The $563 million offering comprises a fresh issue of up to 12.79 billion rupees, alongside a sale of shares of more than 36 billion rupees from existing investors. Fractal says proceeds will go toward repaying debt at its US subsidiary, expand operations in India, and accelerate research and development, especially in generative AI. And sticking with AI, after shaking the world with chatbots, artificial intelligence is tackling three-dimensional reality. And both the US and China are diving right in. Our China correspondent, Elaine Yu, joins us now to tell us more about that. Elaine?
Hey, Amitosh. So yeah, I had a chance to visit the spatial intelligence startup Manycore in Hangzhou, which is one of the 6 little dragons alongside DeepSeek and Unitree, the robotics company in the city. And Manycore has been working on this technology known as physical AI, spatial intelligence, for years now. And that would include creating, quote, digital twins of real places to help machines or even AI agents perceive and navigate and plan actions in our world. And we're still at the very beginning of this kind of technology. Check out our story to find out why. From Meta to Tencent, companies are racing to build world models, using AI to teach machines, steer driverless cars, or even predict climate events. Chinese startup Manycore is one of these companies, integrating AI into spatial reasoning and interaction. The company uses spatial intelligence to understand physical spaces, providing training to robots, AI agents, video content generators, and VR devices. Large language models are trained on internet data to generate text and images. But for physical AI, data cannot simply be scraped online. There's weight, texture, temperature, structure, along with the right grip and force. Robots don't perceive and learn the way humans do.
If can use the AI method to calculate this kind of data, it will become much easier and faster. Our researchers are doing a lot of efforts on that.
Beijing identified this embodied intelligence as one of China's future industries in its upcoming 5-year plan as AI competition heats up. Meanwhile, a U.S. Commission on China has called on the government to double down on robotics and autonomous systems, saying China is making rapid advances in physical AI. U.S. export controls have so far focused on restricting China's access to leading-edge AI semiconductors. In an energy-intensive industry, these advanced chips are more efficient. But Manycore believes China's much lower cost for computing power provides an edge.
If you do the same job with the 3 nanometer chip, the power may be 30% less than a 5 or 7 nanometers chip. But if your energy is like 40 or 50% cheaper, you will still have advantage.
A former NVIDIA software engineer, Manycore's Huang uses NVIDIA solutions, saying the company's chips still perform the best for the energy they consume. But if geopolitical tensions force Chinese companies to switch suppliers, that could change.
If you have no choice, you have to learn something new. Then new ecosystem will be built up. I think it will be really bad for NVIDIA.
But for now, Manycore is focused on simulating the real world for the next wave of global AI. So Manycore's co-founder Victor Huang and I also talked about the open source approach that China has pretty much turned into a movement and also is gaining traction in the U.S. And he said that open sourcing their spatial AI model has brought a lot of advantages, like receiving good feedback from the open source community. But it also means that people don't have to pay for the model and the company can't make money off of it. So they do get some pressure from investors on that front. But with LLMs, they deal with the 2D world, and with physical AI, it's the 3D world. So the world is much bigger, and so it is a long road ahead for this kind of technology, and both the US and Chinese companies are going all in. Amitosh, it's back to you.
Thanks so much for that, Elaine. Of course, China is putting in a lot of money when it comes to AI, so maybe they can find that money there. Thanks so much for that. As major tech companies now prioritize AI infrastructure expansion, clearly the move to hyperscale has increased the tech sector's weight in the credit market. And CNBC's Seema Modi has the latest on this.
The biggest names in AI continue to lean on the debt market, and investors seem to be taking notice. The move in Oracle's 5-year credit default swaps from a 2-year high now to the highest level in nearly 3 years. It tells us that bond investors are buying more protection. They're buying more insurance. And for Oracle, it's increasingly relying on the debt market to develop and lease data centers. Add to that, there's reports of Google's Gemini gaining more traction over OpenAI, which does raise some concerns given that OpenAI is Oracle's biggest customer. They have that $300 billion 5-year deal, and of course its main customer and reason that Oracle continues to pivot into cloud computing and its expansion into data centers. Now, Salesforce CEO Mark Benioff adding fuel to the fire over X, cheering on Gemini, saying it's a better platform than ChatGPT. It all comes down as investors are counting down to Oracle's earnings, which are expected sometime in mid-December, and that is when the street will be looking for more clarity on its spending spree, its competition with the likes of Google, Amazon, and Microsoft, and what it's doing to keep investors calm about its expansion going into 2026. For CNBC Business News, I'm Seema Modi.
All right, coming up, Indian oil refiners are scaling back their Russian oil purchases after U.S. sanctions on Moscow's biggest suppliers. So how does the supply chain look like now, and what does it mean for prices? We will ask Sumit Ritolia of Kepler right after this short break. Welcome back. We're counting down to the market open in India. This is how we are shaping up at this point in time. It's still looking cautious, very cautious, almost flat. But remember, the Nifty 50, it fell below 26,000, which was a tad bit surprising because if you're tracking other Asian markets, tracking Wall Street, then it's seemingly positive given the optimism around a Fed rate cut. But remember, when it comes to India, on Friday you have an announcement coming that might be keeping traders slightly cautious, and that's got to do with GDP numbers. And also, very clearly, you're looking at the US dollar and Indian rupee, and with reports around the RBI's intervention in selling the dollar, the rupee seemingly getting slightly stronger. What else? Now, news coming in that Canada and India may be close to finalizing a 10-year uranium export agreement, according to the Globe and Mail. The deal could be valued at $2.8 billion if finalized, with Canada's Cameco Corp potentially supplying the uranium. According to the report, it could be part of a broader effort on nuclear cooperation. This comes 2 days after the Prime Ministers of India and Canada met at the G20 summit in South Africa and formally declared restarting negotiations on a larger, broader trade deal that was derailed after relations between the two countries hit rock bottom in 2023. Canada's then leader, Justin Trudeau, had accused India of orchestrating the killing of a Sikh separatist in Canada. Allegations that have been strongly denied by India. But ever since US President Donald Trump's trade war and the emergence of Mark Carney as the new Prime Minister of Canada, the relationship has been thawing. Now, oil prices, let's take a quick look at that because they did rise overnight. Stocks to potentially end the Russian invasion of Ukraine progressed. At this point in time, you can see WTI crude at 58.68 and Brent at 63 and Murban at 65.02. Now, this is all keeping in mind that there are these talks that could potentially end the Russian invasion of Ukraine. They've been progressing. There's momentum. US officials have been pushing to broker a deal before President Trump's Thanksgiving deadline. Ukrainian President Volodymyr Zelensky says the draft's initial 28 points have been reduced and that many, quote, correct elements were incorporated into the plan. Zelensky adds that he will be discussing the framework's sensitive issues with US President Donald Trump. Washington's initial peace framework called for Ukraine to cede territory, limit its military, and drop NATO ambitions, conditions which Kyiv has long cited as equivalent to surrendering. It's unclear where Moscow stands on the revised plan, though the Kremlin previously called the original version a potential basis for an agreement. And part of President Trump's efforts to end the war in Ukraine is putting pressure on countries like India to stop buying Russian oil. We are seeing some of that happening now. India's Mangalore refinery and petrochemicals has purchased 2 million barrels of UAE's Murban crude for January loading, according to trade sources. This marks MRPL's second major crude purchase for January, following its recent deal for 1 million barrels of Basra medium crude. Indian refiners had until November 21st to buy oil from US-sanctioned Russian firms and Moscow's biggest oil producers, Rosneft and Lukoil. But we do have Peter Bukwar of One Point BFG Wealth Partners, who told Squawk Box Asia earlier that despite these shifts in the supply chains, the market is still not pricing in any geopolitical risk premium.
One thing that we did not see since the war began in February 2022, we didn't see any disruption in supply of oil. Russia sold less oil to Europe, but they sold more oil to China and India. Interestingly enough, now India is buying much less oil from Russia because of the pressure that the U.S. has put on them, and they're filling their refineries with other oil. So I don't think there's really any geopolitical premium in the price. And yes, it has dipped a bit here on the possibility of peace, but I don't think that the sanctions on Russia has really had any impact whatsoever in the flow of their oil, and therefore there hasn't been any a premium that's built into the price. Therefore, a peace deal, I don't think would be that much of a negative.
All right, joining us now to talk about all of that is Sumit Ritolia. He's the lead research analyst at Kepler. Thanks so much for joining us, Sumit. Much appreciated. You just heard Peter Bukwar saying that there's no geopolitical premium on oil prices. How do you view that statement?
Yeah, he made a good point. Like Russia's exports this month, though particularly to India and China, has decreased, but overall it's trending near yearly average. Like yearly average, Russia exports have been around 3.5 million barrels per day, and this month till 25th, we have seen around 3.1, 3.2. Though most of the exports has been towards the undesignated, undestined location. But yeah, we know that like if you look at from 2022, Russia knows, or the exporters or the sellers in Russia know how to make this workaround happen. So yeah, we may see more intermediary companies like Rosneft, Rusexport, Tatneft coming up along the time as Rosneft local sanctions are in. So yeah, things should normalize. But yeah, in short term, short term, December, January, we see lower exports from Russia, particularly towards India and China, also to do with Turkey. But overall, things should reorganize as time flows.
Have you seen data confirming that India has actually meaningfully reduced Russian oil purchases? Or is this widely held assessment largely based off anecdotes?
No. Actually, we have data points. Like, see, Rosneft and Lukoil were around, they used to supply around 50 to 70% of India's imports from Russia. So we have seen like post October October 23, when US OPEC sanctioned Rosneft and Lukoil, loadings to India from that day, particularly from Rosneft and Lukoil, has decreased. So India used to import around 1.7, 1.8. So we are seeing around 800 to 900 kbd of lower exports, particularly in November. Also, like as we talk, this month's exports to India has been just short of around 1 million barrels per day. So we are seeing around 700 to 800 kbd of lower exports to India. But again, this I will again stress, this is just a short-term or a moderate dip. But as we go on, as the sanctioned supply chain starts to look at it, and we may see more new intermediaries popping up and exports should rationalize.
For the benefit of our viewers, can you just paint the picture for us? Because you talked about Rosneft and Lukoil. Those are the two companies in Russia that are sanctioned. And India used to get in about 50% of its Russian oil from those two companies. But the remaining companies that you talked about earlier, those are still open for India to actually go to and bring in more oil from. But I'm confused, and this is where I think it helps to paint a picture, because you've had, not scripted statements, but unscripted statements from Donald Trump, the US president, effectively saying that we want India to not buy Russian oil. And is this sanctioned Russian oil? Is this all of Russian oil? And at the same time, he said, well, they won't do it immediately. It'll take them some time. So just can you paint a picture?
Okay, so yeah, good point. Like, we need to understand, like, Russian oil itself is non-sanctioned. Like, if we see, for India, we don't buy, like, India doesn't buy any crude from Iran because it's a sanctioned oil. But with Russia, things are different. The seller entity is sanctioned, not Russian oil is sanctioned. If an Indian refiner gets crude oil apart from Lukoil and Rosneft, they are legally bound and in compliance to buy it. Like, again, Russian oil itself is not sanctioned. So on that point, yeah, Russian oil is free if it's not coming from Lukoil or Rosneft. And coming to Mr. President Trump's point on it will take time. Yeah, like, see, supply chain doesn't work overnight. Like, if I don't want to buy today, tomorrow, it's not that. Like, crude buying takes around 8 to 10 weeks of period. You have to place an order, then loading happens, then you have the voyage time, then it comes, then it loads. So it takes around a parcel to get it from getting booked from Russia to land to Indian refinery. It takes around 8 to 10 weeks. So it's not that easy or not that fast, so that if I don't want to buy tomorrow, I can cancel it.
Got it. Okay. In October, your view has been that India is unlikely to rapidly drop Russian oil, all right, despite Trump's remarks. That's what you said through your report. Now, reports also suggesting that India's largest conglomerate, Reliance, has stopped buying Russian oil imports amid global pressure, and predicting in a way that you had said any adjustment is likely to be symbolic rather than structural. And that's an interesting point of view that several analysts have talked about. But keeping in mind that we don't yet have a deal between the US and India, wouldn't the US be watching to make sure that this change by India is structural?
Yeah, I think everyone is watching. And just to add to Reliance point, like if you look at Reliance has two refineries, one is export focused and one is domestic tariff refinery. So again, if you look back, what's Reliance said, that they will not buy Russian crude at their export focused refinery, but they are free, or they will buy. And what we have been also seeing, they have parts logged in for their domestic focused refinery. And if you look at the capacity wise, whatever Reliance used to buy till now from Russian crude, around 80 to 90%, they can buy around the same line and process in their domestic tariff refinery. So in short, it's just the reorganization or reshuffling of crude from one place to another place.
Yeah, I'm sorry, I don't understand, because we're talking about the US effectively asking India for a structural change. And if India is going to do it symbolically, which you've indicated, then how will this trade deal actually happen? Because the US is watching to make sure that it's a structural change.
Okay, so again, I will go back to basics. Like, we have not seen any government comments or any government circular from government of India that they are not buying Russian crude. Like again, we don't buy, the Indian refiners don't buy anything from Iran. So because Iranian oil is sanctioned, that's all. Like, still Russian oils is not sanctioned. Like, if Western or US is too much focused on solving Russian and Ukraine war, they should sanction Russian oil, but we have not seen that. So, and again, like 70% of Indian refiners are publicly owned and 30% are privately owned. So I don't think government can put on a note that you should buy from this country or this region, you should not buy from this or this region. So Indian refiners, being it compliant, they're free to buy from anywhere the economics and the technicalities of that crude suits for their refinery.
Yeah, but the government could come up with a policy, right?
Yeah, and we have not seen that. Like, it's been
sure.
around.
Yeah, and in fact, there have been statements being made that we are not going to be taking any direction from any particular country about how we handle that this oil conversation. Okay, let's just shift the conversation a little bit to what's happening right now. There are a couple of things. Okay. We're just hearing news coming in, which is very interesting, that you do have Russia and China once again discussing, and this is coming from a Russian leader, that how can we expand our oil exports to China. At the same time, you have momentum around the Ukraine war issue, talks, whether it will be resolved by Thanksgiving or not. Do you anticipate India's Russian oil imports resuming if these things actually happen, or are we likely to see the oil trading relationship return to pre-2022 levels when we were basically not buying much Russian oil?
Okay, so Indian-Russian oil partnership has not stopped. Indian refiners are still buying, but yeah, at less pace what we used to buy. But in near to short term, I mean like December, January, we see around 800 KBD at risk, and Indian refiners will be buying around 900 to 1000 KBD only. But over the long term, as I speak, with more alternative suppliers coming up from the Russian barrels, like Russian flows to India should normalize by end of Q1 2026.
The economics, though, still makes sense. So if they are going to do that, how much of a loss is it going to be for India's refineries?
So again, it depends on individual refiners, like how they contract. But as we speak, like Ural's discount, like as what Argus Media has been saying, to Ural's discount to India has increased. Like it has been around greater than $6 to $7 per barrel, whereas before sanction, it was trading at around 1 to around 2 to 2.5. So we see around $4 to $5 per barrel of discounts increase. But again, these are not compliant oil. So yeah.
Okay, the international crude benchmark Brent could dip to the $30 per barrel handle by 2027. As oversupply could overwhelm the market, according to a JP Morgan forecast. But is there oversupply? Because we did have the Secretary General of OPEC, Haytham El Ghais. He told CNBC a couple of days ago that OPEC does not project an oil supply surplus for 2026. So I just want to get your perspective on this.
So again, like it depends on what we are seeing. As of now, we see crude oversupply because October, November, December is a period of high maintenance. But coming along, like as we move into Q1, Q2 next year with peak driving season, like refineries intake should pick up, and we might see a dip in whatever there has been increase in oil and water.
All right. Just about your forecast, given the government's push recently, Indian government's push to increase the share of renewables in India's energy mix, what is your long-term forecast for India's oil demand?
Yeah, it's increasing. Like it's one of the brightest center in the world in terms of oil demand. And if you look at Indian refining capacity has also been increasing. Like we will be adding around 900 KBD of new refineries like in next 3 to 4 years.
All right. Sumit, thanks so much for that. Many permutations and combinations there. And thanks so much for breaking it down for us.
Yeah, thank you.
All right. In the meantime, stricter U.S. scrutiny biting into India's solar exports, plunging to their lowest levels this year. Shipments dropped to 80 million in September from 134 million in August after Washington increased scrutiny on imports to check whether Chinese components were being rerouted through India. The U.S. had earlier been buying more than 90% of India's exports, but manufacturers are now redirecting supplies to the domestic market, raising fears of oversupply. Now let's just segue to another major news overnight. US President Trump spoke to Chinese President Xi over the phone. Elaine Yu is back to give us the details of that call. We're not going to let you go, Elaine.
Yeah, I'm back, Amitosh, because this call is a significant development. We see both sides emphasizing different things, reflecting their respective priorities. But for Beijing, according to their readout, Taiwan was a key issue, and they had strong language as Xi pressed Trump on Taiwan. President Xi said Taiwan is, quote, a return to China. Taiwan's return to China is an integral part of the post-war order, and the readout from Beijing also said that Trump has stressed that the U.S. understands how important the Taiwan question is to China. Trump's readout on Truth Social about the call, it said it was a very good telephone call with President Xi, and he said it was a follow-up more generally and broadly to the meeting they had on the sidelines of the APEC summit last month, and he said that they discussed many topics, including Russia, Ukraine, fentanyl, and soybeans. And he said our relationship with China is very strong. Now, according to the Wall Street Journal, the Chinese side initiated the call, which does make this quite an unusual move, if true. And Taiwan's premier has also spoken out. He said that for the 23 million people of Taiwan, a, quote, return to China is not an option. And he also said that Taiwan is a fully sovereign and independent country. And so we notably, for Trump, he omitted the discussion of Taiwan altogether from his readout. But they did talk about Russia and Ukraine. The two leaders both acknowledged that. So it is unusual to have two highly sensitive subjects both discussed between the two leaders. And some observers have raised whether Trump could change the U.S.'s approach when it comes to China, which has long been governed by the one China policy to make a deal with Xi. So, yeah, this is a very significant development, Amitosh.
All right, thanks so much, Elaine. Now, Indian markets have joined the trading day. We will look at some movers in Mumbai after a very short break. It's slightly negative. We'll come back to that in just a bit. Yes. Yes. Welcome back. Now, the Indian markets have come online. The Nifty 50 muted, cautious, slightly in the red. It's been flirting with 26,000 for a couple of days. It had a date with 26,000 yesterday, but at this point in time, right below that figure. Remember, it has had a high last week, but right now it remains cautious, keeping in mind that on Friday GDP numbers are coming. But there is also this AI conversation where momentum has returned on Wall Street, keeping in mind that you have the Fed rate cut optimism coming about, that impacting Asian markets. Whether it will impact India's market is a separate question. And obviously, you're seeing also the Indian rupee continuing to claw back against the US dollar after you had the RBI reportedly intervening. We're watching this space for a lot more, but these are the big ones that we're really seeing because they are the movers in the Indian markets today. India's Bharat Electronics and France's Safran Electronics and Defense have signed an agreement to jointly produce smart precision-guided air-to-ground weapons in India. The deal creates a new joint venture company with 50-50 ownership, formalizing plans first set out in an MOU signed at Aero India 2025. The partnership paves the way for domestic production of the weapon system, marking a significant step forward in India's drive to expand its defense manufacturing capabilities. The shares of Bharat are 0.83% up and Safran minus 2.38% down. Interesting. Now, Dr. Reddy's Laboratories has received approval from the European Commission for AVT03. It's biosimilar to Prolia and Xgeva, paving the way for a commercial rollout across Europe. The authorization covers all 27 EU countries as well as Iceland, Liechtenstein and Norway. AVT03, used to treat osteoporosis and prevent bone complications in cancer patients, will be commercialized under brand names Asvibra and Exbonzi. The approval follows a license and supply deal signed last year with Alvotech, which will develop and manufacture the biosimilar. Dr. Reddy's will oversee registration and commercialization, holding exclusive rights in the US and semi-exclusive rights for Europe and UK. The shares, at this point in time, up about 1%. Now, Air India has pushed back its fleet modernization plans by 1 year. CEO Campbell Wilson says ongoing supply chain constraints affecting aircraft availability, seats and cabin components are slowing deliveries across the industry. The airline now expects to complete its overhaul in 2028 instead of the earlier target of 2027. Wilson also said Air India has settled most of its interim compensation claims tied to the deadly crash in June, which killed 248 people. Now, some of Air India's flights have also been impacted by the volcanic eruption in Ethiopia. Several flights were cancelled on Monday as Indian airlines and airports were issued an advisory to prepare for possible disruptions from an ash plume that's drifting in after the eruption. The ash cloud is moving across northern India. The Heli Gubi volcano erupted on Sunday for the first time in nearly 12,000 years, sending thick ash plumes across the Red Sea toward Yemen and Oman. And this could make matters worse for residents in North India who are already grappling with pollution. Residents of New Delhi are now taking to the streets, urging their government to do more to clear the thick smog that chokes the city due to the rising pollution. Government and private offices in Delhi are now operating with 50% of their workforce, and schools have also moved to online learning. The city's BJP-led government insists it is taking action. Just last month, launching an expensive but unsuccessful cloud seeding experiment in attempts to wash away the toxic air. The struggle to clean India's air has been a decades-long issue, and protesters now say that the government is refusing to engage with them and that they will not back down. All right, the country is also going to be really taking into account what has happened in Mumbai, where the unfortunate death of Bollywood actor, the legendary actor Dharmendra Deol, has really shaken the entire core of Bollywood. He passed away in Mumbai at the age of 89, one of India's biggest action stars. Dharmendra acted in more than 300 films over 6 decades, including the iconic Sholay, which made him a household name. Media reports say he had been unwell for a month and died at home. Family members haven't issued a statement yet, but stars including Amitabh Bachchan and Shah Rukh Khan attended his funeral. Dharmendra also served as a member of parliament, Tributes have poured in from across India, including from Prime Minister Narendra Modi and President Draupadi Murmu. The country mourning and at the same time celebrating this legendary actor. And on that note, that's all the time we have today on Inside India. Keep watching CNBC.